Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, I'm just going to ask myself, hey, can you pay the mortgage off in 4 years? Now, I don't know if you ever seen the Velocity Banking videos where they talk about, oh, 5 to 7 years, right? And I don't know about you, but at this point in my life, 5 to 7 years is it's too long. I don't want to wait that much to pay off my mortgage. And if I do it in four, I'm kind of disappointed because I want to even do it even faster. But here's the funny thing, right? Our standards as a society are so low. It doesn't even matter what dysfunction there is. Most of the dysfunction is like a 50% plus failure rate in anything that people do. So let's talk about mortgages, right? What is the percentage of people who actually pay off a 30-year mortgage in 30 years? We'll say less than 1%, up or maybe about 1% on a good day, right? If we're being conservative. Most people don't pay off a 30-year mortgage in 30 years because of either refinancing or they sell a home and get a new loan that replaces their current one. So that 30 year loan essentially becomes a 35, 37, or a loan that stays with them until they die. And then their kids have to either sell the property or they just keep paying on the loan, right? So if we could pay off a 30-year loan in 30 years, we pretty much beat 99% of people. But let's discuss, can we do better, right? And so the question we're asking ourselves, how do we pay off this mortgage in such a short time? And can we do it in 4 years? Well, there's this thing called Velocity Banking. If you've never heard of it, go ahead and click the links down below in the Velocity Banking 101 and 102 video, and then come back here just to kind of discuss, like, hey, can we do this? Is this really possible, right? So let's just take a look. Here is a mortgage statement, right? I got a screenshot online. The due date is actually last year, 2022, right? And let's take a look at when we got this mortgage. So if you look at the maturity date here, it says 2051. That means that's the very last payment. That's when the 30-year last payment happens, right? So if you want to figure out when the first payment was, you just subtract 30 years. So it's 11/1/2021. And then if you just kind of do the math, you can figure out, oh, 1 year has passed. 1 year has passed since we got the mortgage, right? And if we take a look at this and we take a look at this, we could kind of figure out, all right, well, let's figure out how much we paid off in 1 year, right? What percent? So now we just put 238,496 minus 179,681.65. Oh, 68. Let me do that again. 179,681.65. And so we paid about $58,000 of this mortgage without really changing our lifestyle. And we're able to pay off the debt and control our liquidity. So we have no issues there. And we're not sweating bullets because we overpaid the mortgage with our savings, right? All right. So now let's figure out what percentage of the loan was paid off. So divided by, let's see, you divide by the original loan amount. So 238,496. And so the calculator is saying we paid 24.6% of the mortgage in 1 year. In 1 year, right? And if we round it up, that's essentially 25%, which is 1/4 of a year. So think about that. We paid a quarter of a mortgage in 1 year, and if we are at the same rate, essentially, we're going to pay it off in 4 years or a little bit more than 4 years, right? And so it's definitely possible. Now, here's the thing. There comes a point where your best is a pipe dream for most people, right? But let's think about ways where, hey, even though this is our best, how can we have done this better? First thing, well, first and foremost, right? Buy it at a discount. So this home, we did not buy it at a discount. It was market value, right? It was market value. We got that 20% down payment. But what if we had bought it at a discount? Then it would have been a 3-year payoff. It would have been amazing, right? And so, you ask yourself, who does that? Nobody. First of all, most homeowners, right? If they get like a 30-year mortgage and this is at 238,000, and even at a low interest rate, this is like the next year's like 237 or 236. So the fact that we're here in 1 year, amazing, right? But what if we could do better? Well, again, buy the home at a discount. And that's one of the things we emphasize in our group. So here's a property that I bought end of 2022. Look at this estimate, 340, right? $209,000. And here's the thing I regret. I probably couldn't, I wish I'd got an even bigger discount. Bigger discount means you create wealth out of nowhere. But that's the things that we always emphasize in the group. Now, compare this to the average American, right? Let me show you what the average American does. So this is a home that I know of in the 90s. You know, I have contacts back in California. So this was a $280,000 home back the early 90s in Southern California. And look what happens. Here's the thing about financial data. It's public in the United States. It's not easily accessible, but it's public data. If you have an MLS license, or if you have a real estate agent license, or you have access to certain software subscription services, they pay a lot of money for this data. And so you pay them a fee, you can access it, and then you can kind of see here, right? $280,000, $280,000 when the property was sold. Now, 30 years later, that should have just been zero or close to zero. Take a look. Almost 30 years later, they're owing the same amount that they borrowed. That's the average Americans. Folks, the bar is low. The bar is low. If you could pay off a 30-year mortgage in 30 years, you're better off than 99% of people. But if you join our group, you're going to be on like rocket fuel, almost 99% guaranteed, because you're going to learn about velocity banking. You're going to learn about how mortgages work. You're going to learn about buying homes at a discount. That's even better than like anything. Like you combine buying homes at a discount and velocity banking. That's like the ultimate combo, right? And that's why, let me go here. If we engage in what we call, quote, advanced velocity banking, you pay off the home in about 3 years because you have your income, right? You got the tenant's income. You bought it at a discount. That is steroids for velocity banking on steroids, right? And then once it's done, then you get that nice cash flow. You get that nice check coming in every single month, and you don't have debt. Because what happens when you have a rental property debt? You don't really get cash flow. You don't. So it's just like if you have rental property with debt, it's like a tenant paying for your retirement fund that you don't really get to see. You know what I mean? You don't get to see that money because with debt, no cash flow, almost no cash flow. Maybe you get $100, $300 a month. But who wants to take a $200, $300,000 loan for 200, a measly $100 to $300 a month? It doesn't sound good. So it's a better idea to get that extreme cash flow and pay off the houses and get the house at a discount. All right. This is Korean Atlanta Mentorship. If you're interested in joining our group and following these principles and learning about this, go ahead and click the Google form link below and submit your information, or you could email us by going to the About page of the YouTube channel. Have a great day, everybody, and we will speak soon.